Last week was a very tough week in the financial market, that's in the forex market. When we have the sell-off in the dollar as a result of the lower than expectation CPI results, which gave Fed more hint for the July rate hike. So we saw the sell-off in the US dollar, and then the best currency for the long last week was the Swiss franc, and then we saw the rejection at the 61 to 50 Fibonacci retracement level in the JPY currency. That is a retracement from the monthly candle, the one we did the other time, and then there's actually a retracement last week, and then we actually make the retracements. But the US dollar sell-off might still continue. Let's see how it goes this week. This is the weekly forex forecast. So before we continue with the technical, let's check out the fundamental, the economic activities, also known as the fundamental activities for this week, and then how it for last week, how it affect the market, and then the economic activities of this week and how it will actually affect the forex market. So last week on Monday, we don't have much in terms of fundamental. We don't have much volatilities in terms of fundamental last week, but the volatilities start coming to the market on Wednesday, earlier on Wednesday, when the Bank of New Zealand dropped their rate statement, which they drop it as a previous result. So it comes out 5.50, and then on Wednesday too, the US dollar dropped their CPI results, which comes out disappointing. That's lower than expected, and we have a big sell-off in the US dollar, and US dollar comes weaker among the major currency and is the weakest of all. From that Wednesday to Friday, we saw a big sell-off in the United States dollar, which actually gives the Fed another opportunity for a rate hike in the July or probably August. So let's see how it goes right there. On Thursday too, we have the core PPI. If most of the time, if the CPI drops lower, then actually we'll see the PPI drops lower too, because from the producer to the consumer. So actually the PPI is the producer price index, while the CPI is the consumer price index, and actually what happened at the producer level will affect at the consumer level. So the Thursday PPI result, sometimes it might vary, sometimes, but it depends. So but the Wednesday CPI result actually gives a hint to the Thursday PPI result that it actually comes out lower than expected. And we saw the unemployment claims, which reduced drastically from 251 to 237,000 people filing for unemployment claims in the US. It's good for the economy, but the impact of the CPI is still very much around the dollar last week, which make it weak against most of the major and then the minor currencies. So on Friday we don't have much on Friday, and then last week the weak currency is the US dollar, and then we have the Swiss franc, which is the strongest currency last week. And at the end of last week too, we saw the Canadian dollar sell off at the end of last week. That is on Friday, and they actually dropped their interest rate on Wednesday, which is 25 basis point rate hike. That is on Wednesday. But on Friday we saw the sell off in that particular currency across the major currencies. So from Wednesday, Thursday, Friday, the Canadian dollar sell off across the major currencies. So we have the US dollar, the Canadian dollar as the weakest currency last week, and then we have the commodity currency, that is the AUD, the USD, and then the Swiss franc as the strongest currency last week. So let's check this week. Maybe we'll still continue with the sell-off in US dollar, and then maybe the Swiss franc will still continue to dominate the financial market this week. So this week on Monday we don't have much on Monday in terms of the fundamental. We just have the Empire State Manufacturing Index out of the US dollar. But on Tuesday we have the monetary policy meeting, that is on Tuesday, and then watch out for the Canadian CPI which is the inflation measure and indicator news. So let's see how it goes in the CPI. It is a must to watch out for the CPI because this CPI will actually determine the direction, because after the drop of the FOMC out of the Canadian dollar, so the next focus will be on the CPI. So let's see how it goes on CPI. Market will take any result that comes out of the CPI into consideration on Tuesday. On Wednesday we have the GBP CPI, that is the one for year over year, which they predicted a slowdown. That is the forecast is a slowdown from 8.7 to 8.2 right there. And on Thursday we have the unemployment rate and the employment out of the AUD. So the pair we should be looking out for this week should be the Canadian dollar, the AUD, and then the pounds. And the last week too, we saw the pounds selling off across the major currency except the US dollar and the Canadian dollar, which pounds gained strength against the two currencies, because these two currencies are actually the weakest currency last 2 weeks. So this week, let's see how it goes. Maybe we'll still have the dollar sell off, or we'll see some trends coming out into the dollar and then the pounds also. And this week we might actually look for retracement in dollar this week, because we have a very big sell-off last week, and then after a large sell-off like that, we should see a retracement or some range to maybe another sell-off, or maybe this they will actually come in for the rescue of the currency. So let's check out the technical analysis for the week. There is a big sell-off in the dollar last week as a result of the CPI. So we saw a big sell-off from here and break this support level, this very strong support level, to the downside as a result of the disappointing CPI results and then the PPI results from the US dollar. So what are we looking at in the US dollar this week? Probably we might look out for a retracement back to retest that broken resistance, that broken support. So but before then, we might have a move below this area, then actually a retest of that level before we see a rejection back to this level, and this level is at 94. So let's indicate that level, because actually we can still see an opportunity for a big sell-off. Let's show the bigger picture of this. Actually the bigger picture of this. So this is a very strong level right there that has been broken to the downside. So actually you might see a retracement, then coming back to 94753. But another thing we have to check out is that this selling in the US dollar was not induced by the central bank or the collaboration of the Fed or other sectors. Is the market condition and then the CPI. So actually we might see a reversal soon. Two things you have to watch here. If we retest this area and reject, it means that we are coming back to 94.753. but if we actually reject this area and move back above this level, that is when we know that okay, we can actually see a more move to the upside at this particular area after we have a rejection below this level. It can actually happen because the sell-off is not induced by the central bank. It is induced by the likely softer than expected the CPI result, which actually gave rise for a big sell-off in the US dollar last week. So let's see how it goes, and it is below this particular support level. It has break the support level to the downside, and then we see the break below this area. So if you actually use the weekly time frame, you see that we might see a retracement this week before the continuation to the downside. So if the retracement comes in, it might comes in at this level back to this, or this weekly candle might actually break this level here, and then we might actually see a turn back to retrace that level before the continuation to the downside. So I'm looking at, that is what we are looking out for in the DSY. And don't forget that we might actually see a range in the DSY for the next couple of days. That is we might actually see a range in the dollar for the next couple of days. Then maybe we actually break to the upside or continue to the downside. That is what we don't know right now, but the future will tell us. But as for now, the probability is still to the downside, but actually we should look for maybe US dollar rally at the beginning of the news to retest this broken support level and then reject to the downside. So the first pair we want to check is the GBP US dollar. So let's clear this. So indicating the possible reversal area, you have a break of structure at that area. There's a break of structure here too. There's a break of structure here. There is at this area too, and then we have another break of another support level there. So we have a level sitting right there. That is where the opposite effect actually comes in, and then we have another area up here. So if we zoom in further, you see that GBP US dollar is the O bias is still to the upside. So if we use the daily time frame, this daily time frame tells us that we might actually be looking for a retracement at this level before the continuation to the upside. If you look at it very well, the buyers are actually losing their momentum at this particular area, and we have two levels sitting here for a possible reversal. This level and then this level respectively. So if you want to opt in for a buy, and then we should not forget that the trend line will actually be valid at this particular area. So if you see a reversal on GBP US dollar, or if you are going to trade the GBP US dollar, or if you are going to short GBP US dollar at the beginning of the week, you should be waiting. You should be willing to take your profit at this level or at this level. But this is actual level that actually goes with the trend line. If we check it, let's zoom it closely. As you can see, this is the level that actually goes in line with the trend line, and then we should see a reversal from there to that particular level. That is to the high right there. So that's what I'm looking at on the GBP US dollar. But if we did not actually see a reversal here, if it resume the uptrend, then we should be looking for a reversal here. I will not be taking any trade if it didn't reverse to this area or we test this area before the next upside move. If we just see maybe a reversal here and start going up, I won't be trading the USD until 1.32430, which I might be looking for a reversal at that particular area. So if you want to short at the beginning of the week, this should be your first take profit, and this should be your second trade profit. But if you want to long, you should be waiting for a rejection here to go on the long side, or you wait for rejection here to do what to buy. So that's that on the USD. So let's check the Euro US dollar. So on Euro US dollar too, you can see the similar thing in GBP US dollar, also in the Euro US dollar. So we need to highlight the important reversal area. That is so that is the area of value right there. So as you can see, Euro USD2 is to the upside, so I'm looking to long Euro USD. So any retracement you see to this level and then coming back to retest this level should be an opportunity for you to look for a bullish setup to 1.14597. So that's what I'm looking at on Euro US dollar. So I'm willing to buy the Euro US dollar last week, and then this is the take profit level. That is where the opposite effect might actually comes in, and you might not actually let your trade run to 1.14530, because you might actually take your profit at 1.4045. That is a safe place to take your profit, because at this area we might have a large selling momentum coming to the market right there, and then your trade might actually hit a break even. So any treatment you see back to this area, because we have this long momentum weekly candle close. So anytime we have a long momentum with weekly candle close like that, they used to be a retracement. Not all the time, but most of the time we actually have a retracement, and then probably we'll see a more continuation to the upside at that particular area. So that's what I'm looking at on Euro US dollar. So any retracement you see will be an opportunity for you to look for a bullish setup to 1.14530. So next way we want to check is the AUD US dollar. So checking this level on AUD US dollar, you see that this level is a very strong resistance level right there. The level sitting at this area is a very strong resistance level, whereas we have a rejection at this particular level. So if you check let's check the daily time frame and see what's going on in the daily time frame. As you can see, using the trend line shows that this particular level right here is a very strong resistance level at that particular area. So let's see how it goes right there. So if you zoom in further, you see that the daily candle close is bearish on Friday. So let's check the 4-hour time frame. The 4-hour time frame too is down. So here we are looking to short sell the AUD USD back to this level, because this level is a very strong support level. The opposite firm actually comes in at this level, but I'm willing to short AUD USD if I see a retracement to this level. Then I'm entering a short position, taking the first profit here, and then taking the second profit here. And then if you are not willing to sell, if you are willing to go on a long, you should be waiting for this level to go on a buy on the AUD USD, or this level actually, or this particular level on that currency. Yeah, so let's check the SND US dollar. Setting the US dollar to the whole scenario is to the upside, but we can finalize something at this area. As you can see, it's showing a sign of rejection at this area, and this area is a very strong resistant level. This area right here, where we have a strong rejection bias, is a very strong resistance level, and it has tested that resistance level. There's 1, 2, 3. This is the 4th time, so it might actually hold. The level might actually hold right there. So let's check the 4-hour time frame. So in the 4-hour time frame, we didn't actually see let's move to the 1-hour time frame. Maybe we can say something on the 1-hour time frame. So I'm not willing to buy SND USD for now. So what I'm willing to do is to sell after the buyers has already lose their momentum at this particular area, and then this particular area is a very stronger resistance level. So if I'm willing to sell and take my first profit at 0.63010, and the second take profit at 0.62234, and then I'm not willing to take this trade if we have a move above the last week daily candle. So it means that if we have a move above this level, I will not be willing to sell as in the USD. So that's about the as in the USD. And then we have the US dollar, Japanese yen, and last week we saw that most other pairs are through with the retracement. That is the monthly retracement. So let's check the US dollar JPY. This one actually closed below it has not closed, but we have a move below this monthly candle in just 15 days. So let's see how it goes. Maybe we'll have a reversal at this area, because this area is a very strong support level or support area right there. So this area is a very strong support area right there. It's a very strong support area. So let's use the daily time frame, and on the daily time frame we saw the close of the US. We saw the close of this of the daily time frame, that is on Friday. We saw it closes bullish, which means that we might actually see a reversal at this area, and this might actually be a fake breakout, because we have a breakout of this level. So this might actually be a fake breakout, and actually see a continuation to the upside. It actually forms a new high right there. So let's see how it goes on US dollar JPY. So let's check the 4-hour time frame. Yeah, the price is still looking like we are still going to the upside, but let's see how it goes, because if the market did not actually close below this level, I'm not advising to go long on that particular PS unless we have a close above that particular level. At that particular level right there. So let's check on the AUD JPY. So AUD JPY, we have rejected that particular area right there. That is the 50% Fibonacci retracement level. So let's check the monthly time frame. I'll put the retracement. That is from down to top. So this one actually rejects at 61.8 Fibonacci retracement level of the previous month candle. So we should be looking to buy on the AUD JPY. So as you can see, we have a big rejection at this area, which make it form the hammer candle, and then the hammer candle is in line with the overall trend. So what we are looking at is to the upside. So we might have maybe a bearish candle on Monday, but we should have a close that is this weak candle. We should have it close above this this big rejection candle right there. So if you use the 4-hour time frame, let's see what's going on in the 4-hour. This actually looks like a rejection in the 4-hour time frame. Yeah, this actually looks like a rejection in the 4-hour time frame, because we have a very strong support level here, and then we break the level down. So we break this particular support level to the downside, then we come to retest it. So actually, you might see, before we see a bullish move on the AUD JPY, so you might see some bearish pressure coming out here, and then retest this particular low before we have a move to the upside right there. So that's what I'm looking at on AUD JPY. So on pounds JPY too, this level is a very strong level. Watch out for this level. Is a very strong level, and then we'll see how the Japanese yen closed towards the end of last week. So if you are to zoom it further, you see that there's absolutely a rejection at this particular area, which might be looking, if you want to take the trade, you might be looking to set your stop loss 1 here, and then actually your take profit 1 here actually, and then your take profit to at that level. So another thing we can use to confirm this is the trend line. So let's just zoom it further and then place the trend line on it. Maybe we'll have a big sell off or a buy at that particular area. So let's see how it goes. And you know, this level this level, and then what I see here is that the trend line is somehow slopey, and then we might have a probability of breaking out this level. The trend line is somehow slopey, so there's a high probability that we break this to the downside at that level. So let's see how it goes right. But first thing I'm doing on JPY is to sell this particular currency to this area. Then anything can happen after this particular. Maybe we have a breakout or a rejection right there. So this is why I'm looking to take the sell on JPY at beginning of the news. So the strongest currency last week, that is the CHF JPY. We saw JPY rally towards the end of last week, but right now this is what I'm looking at here. We have break this structure high, and then there is a rejection at that level. So let's just indicate the levels. So that's the high right here, and then we have the low here. So putting the odds together in the smaller time frame, so yeah, if you actually see a rejection at this particular area, because we are seeing it is a series of higher low and then the higher. So the higher low has been created at this particular area. So it's actually wait for rejection here to buy to the top. That's what I'm looking at on CHF JPY. So I think we should check AUD CHF. There's something I'm looking at on AUD CHF too, which is to the downside. So there's a rejection at this level. That is the supply level right there. If we check the big picture, let's go to the daily time frame. So the big picture is to the downside, as you can see right here. This is a high at that particular area, and then this is another, and this is another high right there. So if we put the piece of puzzle together in the 4-hour time frame, this tells us that it might actually form a new high. So that we'll be waiting for a breakout to write a massive sell on AUD 6 franc right here. So actually looking for a break to the downside at that level. So we might actually see a break to the downside to 0.57355. That is at the level we are looking at right there. But for now, let's see how it goes on this. And this is the weekly Forex forecast. This is the few pairs I'm willing to take, and then that's the entry and the exit I mentioned are the one that I'm actually going to use. So if you are just joining us, or if you are new to this channel, please click on the subscription button, like, and share this piece to your loved one. And we have the risk to the we have the link to the verified broker and the verified prop firm in the description box. And the good news is that my Forex fund and the FTMO are now doing no time limit evaluation, so you can actually pass your challenge with ease. So if you check the description box, you'll see the link to my Forex fund and then my funded FX there. So you register and then start your challenge, and probably you pass your challenges. So let's see how it goes right there. So this is a weekly Forex forecast. Have a good trading week.